post now.
We're live. All right. Okay. So 3, 2, 1. And I'm the host. All right. So let's get this started. Okay, another episode of the things I wish I knew about money. I'm your host, Camille Smith.
And I'm your co-host, your boy Dre.
Hey,
Hi,
all right.
how's
So
it going?
everything's good. How's everyone's Saturday? How's everyone's Saturday?
Fantastic.
Pretty good so
Awesome.
far.
Even on a gloomy day or a rainy day, it's all good.
That's right.
Well, this is a special occasion. We wanted to celebrate, or not celebrate, have awareness going on Life Insurance Awareness Month. It's always in September. I believe we dabbled into it earlier in the year, but we just thought it'd be only right to bring on a lovely guest like Nicole to share some stuff about life insurance. I actually met Nicole, what was it, 2018?
Mm-hmm.
Yeah, we met at Black Moms Connection, the Finlit. So, big up Tanya and the team. They're very special to me because they always supported me no matter what. And I know they've been supporting you as well and your family. And it's a perfect time to talk about, certain things because I know you have a lovely family business. I just wanted you to, share it with us. Tell us about yourself, Nicole.
Yes. So thank you, both of you guys, for having me today. This is amazing. I'm glad to be on your podcast on this Saturday evening. But yeah, I mean, for those who don't know me, my name is Nicole Simons. I am a licensed life insurance broker. But the title that I prefer to give myself is I'm a wealth management advisor because I deal with life insurance as well, but I also deal with some investments as well for my clients. So basically, my job as an advisor is to kind of help build that financial protection around you so that in the event something were to happen, whether that be premature death, an illness, disability, that your family or yourself is financially protected. So that's what I do. I'm celebrating I guess this is my 10th or 11th year in the business this year. So I've been doing this for quite some time. And as you mentioned, I am part of a family business. So I am the youngest of 3 siblings. And my siblings and I are all advisors in our business, which is titled CPN Financial Services, which was started by my dad over 30 plus years ago. And yeah, we're all advisors in the GTA. We have other advisors that work for us as well under our company. And yeah, we just want to see our Black people thrive and create that wealth.
Nice. Good stuff.
Mm-hmm.
Congrats. That's an incredible success story.
Right? Now the question is, like, because your dad made the family business 30 years ago and you used your name as well, did that inspire you to like stay with the business, or was there something else that you wanted to do before and all that?
Yeah. Good question. So once again, for those who don't know, CPN Financial actually stands for Colin, Peter, and Nicole. So I am the N, and my siblings, Colin and Peter, which are my brothers, they are the C and the P. So my dad started this company when I was young. I definitely would have been in elementary school at the time. And life insurance, being an agent was not at the top of my list, I'm sure. It's not exactly the sexiest of occupations. So definitely not. It wasn't something that I was thinking about in the beginning. And I don't remember my dad ever really like talking to us about, joining, maybe little seeds here and there planted, but there was never any pressure. My dad was very open, for us to do whatever we wanted to do. I went to university, got my degree in communications, and I worked for a I worked for a telecommunications company for almost 10 years before I jumped in full time in this business. So my brain was really programmed not to be self-employed. I was kind of like everybody else, go to school, get your degree, work for a huge company, and kind of just work your way up the ladder, right? That was kind of where my head was going.
Yeah.
Eventually, with a telecommunications company, there was some restructuring, and I got laid off from that job, and
Right.
literally I transitioned into CPN right away. Like that following week, I was at the CPN office, and long story short, like there's no looking back. You couldn't pay me to work for somebody else ever again. Like
Wow.
self-employment is the way to go.
Hold on. That deserves the sound off. You already know what I'm gonna. That's amazing. That's just like the universe literally aligned you into the way that you were supposed to be doing it, right? So that is really crazy. And I think last month or so, you guys were featured in a newspaper or in a magazine.
Yeah, so I think you're referring to last month. We were in the Globe and Mail. So we were in the Globe and Mail, and we were actually speaking on the same topic in regards to succession planning and what does it look like to have, a parent and kids in the business, and what does that look like in regards to passing that on and whatever. So the article was featured with us and some other companies as well that had agents and siblings and fathers and how that whole dynamic works. And, we're kind of a unicorn in the business, I could say, because it's very few people that can say that their siblings, are working in the same business, get along in the same business.
Right. That's an important point.
And then, we started by their father in the first place, right? Like everything just really happened organically because once again, my siblings were also doing other things too. My brother is a teacher, elementary school, something totally different. So we were all doing different things before we got into the business. And we're so thankful now that, my dad started this because it's providing for, of course, ourselves, our families, and we hope to, of course, pass this on to our kids as well.
Right. You mentioned a really important point. It doesn't speak so much about life insurance, but it is something that I know a lot of businesses, especially within our community, struggle with is succession planning on a high level. Like, what would be your top advice for business owners in terms of succession planning, especially when they have kids that they want to pass on a business or different types of companies to? What would you say is your top advice?
Well, there's a lot of moving parts. I think, we're still even working kinks out, ourselves. Not everything is down pat. But I think what's important to pay attention to is just making sure that the family structure is there in regards to you yourself and your siblings actually wanting to be part of the business.
Right.
And to make sure, is this something you want to do forever? Are you just trying a little thing where you're doing it for now? Or is this going to be 15, 20 years down the line? All of that has to be put into play because you're working for yourself. You have other brokers, or other employees that work for the business as well. And it's not everybody's genuine interest to continue with this business. Some people are forced into a family business. They don't even like what they do.
They don't like it, right?
Or maybe because they want to please their parents or whatnot. We genuinely like what we do, and we're so thankful, that our dad created this, so we don't really have that problem. But I think the top advice would just be to make sure that you guys do a deep evaluation in regards to looking to the future. Is this what you want to continue doing? And then just if it's not, which is cool too, make sure you have necessary plans in place.
Right.
Professionals to make sure that it could be handed off in a professional way if you don't plan to continue.
Right. Okay. Makes perfect sense.
It's all about planning accordingly and figuring it out at the end of the road, right?
Absolutely.
And, just to steer it back to life insurance awareness. What are certain things that that you find that you would want to mention to the community, especially our community, about like life insurance or any insurance in general?
Yeah, well, there's a lot that could be said. I mean, I think we all can agree that within the Black community, there's such a lack of literacy when it comes to life insurance. I mean, I think financial literacy on a whole, there's a lack of knowledge there, but specifically pinpointing, the life insurance aspect, there is a lot of, misinformation, a lot of incorrect information that has been passed down from generation to generation. And what we don't realize is that a lot of the times, our parents are our biggest teachers. And sometimes because our parents didn't have something, we think, well, mom and dad didn't have it, so why do I need to get it? You know what I mean? Yeah. And we have to understand that to break that cycle, to break that generational curse, we need to be different. We need to step up. Need to be that new foundation, because just because your mom or dad didn't do it for you, or they didn't think it was a good idea, that doesn't mean that that's how it has to go for your life, right? So I want to encourage people to, just in general, to seek information, even if your elders or your parents, it wasn't something on the top of their list. Life insurance is one of the surefire ways that you can create generational wealth for your family, right? And just because you didn't come from wealth doesn't mean that you can't create it yourself. So speaking with a financial professional like myself, or whoever, you're close with as an advisor, definitely can steer you in the right direction. But one of the key components, though, I do want to say is you want to treat life insurance as something you want to get yesterday, right? A lot of people are under the miscommunication that, old people thing, I'll get it when I'm older, you know what I mean?
Old people thing.
I don't need to get it right now. I'm 20 years old. I ain't got no kids. I need life insurance for, but honestly, if somebody is going to be financially impacted by your death, at 20 years old, at 19 years old, somebody's paying for your funeral. Your mom, your dad, your uncle, whoever the case may be, your guardian, somebody's going to have to come out of pocket financially to pay for that burial costs. So at the end of the day, even if it's a small portion, you need life insurance. Second thing I want to say is that the reason why you want to treat it like yesterday is that predominantly life insurance premiums are based on your age and your health, and you're never going to be younger than you are today. So if you're 19 years old, 25 years old, now is the time, because you're able to lock in that rate depending on the type of coverage you get, and you'll be able to have a great policy while you're young, while you're healthy. A lot of people, especially in our community, they tend to be more reactive than proactive. So somebody dies, they get sick, whatever, they have a diagnosis, then they start to look into things. And then there's a real issue there, because not only will you probably not even get approved, but if you do get approved, your premium is going to be a lot higher because you're not healthy as person A. So life insurance is something you want to put into place while you're young, while you're healthy, while you're fit, so that you're paying a smaller premium and that you can have it hopefully for the duration of your life.
Okay, and you know what? I'll admit, when I was younger, because I'm not in my 20s no more. I was just like, yeah, what is the point of like life insurance and all that good stuff? But what I started noticing was friends and family, or even like social media, a lot of GoFundMes would be happening, and I was like, it started breaking my heart. At a certain point, I'm like, okay, something's got to give, because I feel like we're the only race that doesn't fully prepare for these certain things, right? And Nicole, what you said with building wealth with life insurance, I said, how's that possible? Can you tell us about that? Just so other folks will be able to know, because we have, a couple people on live and all that good stuff, and we just want to educate as much as possible. So how are we able to build wealth with life insurance?
Yeah, so with life insurance, I mean, depending on the type of policy that you get, right? So there are different types. So maybe we'll touch on that in a little bit, but there are different types of coverage that you can get. But depending on the death benefit, AKA the amount that you sign up for, your coverage amount, right? That can have a really life-changing impact on the generations after you, right? If you're somebody that has kids, you don't even have to have kids. I keep throwing kids in there, but I'm throwing in kids because a lot of my people that come to me and my clients are families, young families, right? And, you have to understand that when you get a life insurance policy with a significant death benefit, if you were to pass away prematurely, you're financially changing the lives of the people you've left behind. I think when people think of life insurance, they're programmed to think of it as burial costs, like pay for my funeral and that's it. Which generally, yes, that's the initial thought of why you want to get it. But it's so much more than that. Once again, depending on the death benefit that's purchased, it can have a real lasting effect on the generations after you, your kids, kids, all of that. And I think most people's mentality is not framed to think that far. We think of the right now. We think of, okay, can I be buried, with this amount of money? But it's more than that. You know what I mean? If you want to change the lives and make sure that your kids are good, if you're somebody who's very pro self-employment, doesn't want your kid to work for the man, how about leaving us some type of financial legacy behind where your son or daughter now can start their own business? They can start, whatever type of company they want just because of that money that was left behind, right? There's also the investing aspect of things. When a life insurance policy is paid out, burial costs, taxes, probate, those are all those things that have to be taken care of within the first 2 years of death. But if there's significant amount of money that's left over, most people that are smart with this leftover money invest it. And if you have a large amount of money to invest, everybody knows the effects of compound interest, how that will work by you putting that money away and being able to draw from it. Like you can draw from it like you have like a salary. Like, man, there's so many things you can do, honestly.
Right.
But the wealth aspect really comes into play of just looking at your immediate costs, your immediate needs, but then looking beyond that. What type of financial legacy do you want to leave behind for your kids? And if you haven't thought about that yet, that's cool. But hopefully this conversation will help to jog that memory and have you think now, okay, you know what? I wasn't thinking past the burial and the tombstone. What do I want my son or daughter to take away? What do I want to leave behind? What financial gift or legacy do I want them to have? That's where the wealth comes into play. Now, one other thing, I keep talking about when somebody dies. What about while you're alive? So when it comes to when you're alive, how life insurance can benefit you is depending on the policy, specifically whole life or universal life. These policies have cash value components to them, where with universal life in particular, you are able to put money into the policy, which is called overfunding, and that money grows tax-free within the policy and pays out tax-free on death. So if you're somebody who's maxed out your TFSA, maxed out your RRSP, looking for somewhere else to have some tax sheltered growth, you can use your universal life policy, throw money in there. You don't have to, but it's an option. And this is another way that you can have another stream, I guess, of revenue, income, I guess you could say, of wealth just within your policy. And it'll pay out tax-free on death to your loved ones. So,
and sorry, when you say it grows, well, so thanks for putting out all those gems. Those were really good points. And this is something
I'm
that the
just like
community
trying
needs.
to take in.
Right, yeah, like wealth creation is conversations that I personally love, and Camille, I can attest to Camille as well. But when you say your money will grow, like is there a fixed percentage, or is there something guaranteed, or you're just like saving? Like, how does that work?
Yeah, good point. So once again, depending on the company that you're placed with, majority of companies, life insurance companies, they all have different investment funds that extra money will go into. So let's just say Andre's putting in an extra $50 a month. That's what he can afford right now. Yourself and your advisor will look at your risk tolerance and pick an investment portfolio for that money to go in. Now, we all know investments that are tied to the market goes up and down. So there's not really any real guarantee there. However, besides the investments, there are like some fixed income options, like a 2-year, 3-year high interest. So there's literally a whole list that you can choose from.
Gotcha.
But majority of the people that are doing it, they don't want to do it for like a little 1-2%. They want to put money in there tied to the market. So once again, you and your advisor would look at the funds that are available, look at your risk tolerance and how you're able to stomach risk, and pick a portfolio or a fund that this money can go into. And that can be changed at any time. So the growth, to answer your question, is dependent on the fund that's chosen.
Got you. Perfect. Yeah, no, that's good. I'm glad you clarified that.
Yeah, that's I didn't even know all this. Eh?
Yeah,
And
that's why we have the experts in the house.
Exactly.
and on the whole life side of things, so I know you were asking about whole life a little bit too, Camille. Whole
Yeah.
life, which is a little bit different than universal life, also has an investment component as well. But
Okay.
participating whole life is basically where if you have that particular policy, you are considered a policy owner or holder of a par whole life. And by being an owner of that type of policy, you
Mm-hmm.
get to participate in company dividends. So XYZ company
Yeah.
every year will have a surplus of money. Well, we don't know if we hope they do, but typically what happens is from the surplus and from a particular account,
Yeah.
they pay their policy owners a dividend. And
Mm,
that dividend, you can do multiple things with that dividend. But one of the main things that my clients like to use their dividend for is to
Mm-hmm.
buy more coverage. So what's cool about a whole life policy, a participating whole life policy, is that let's just say your original death benefit is $50,000. You can get a
right.
$50,000 policy, but every single year when the dividends are being paid into your policy, they're buying more insurance. So your death benefit is growing year over year. And at any point in time, if you want to surrender those dividends, as in take the cash for them, you can do that
Right.
too. So you have original death benefit that's growing year over year by policy dividends. You have
Mm-hmm.
guaranteed cash value that you can also borrow from as well. And you
Mm,
can also structure the policy to be paid off in 20 years if you want. So let's just say
I
you don't
know.
like the idea of paying for life insurance forever. You
Yeah.
have the ability, if you want, to structure your policy where it can be paid off in year 20, no
Mm-hmm.
further premium is required. But guess what? The policy is still growing in value because the dividends are still being paid year over year.
Mm.
So you done stop paying for the policy, you're done.
Yeah.
However, it's still growing in value because the dividends are being paid into the policy, buying you more insurance.
And I
Wow.
think that's what a lot of people choose. Because I've sometimes people ask me questions. I'm like, woo, 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 woo. When it comes to life insurance, like like I just kind of base it on like what their budget is.
Mhm.
Like
Right.
whether they can afford it or not. I'm like, man, this seems complex but not complex. I'm like, so they're saying you pay for 20 years and you just keep it for the rest of your life. They're like, yeah. I'm like, yeah, that
Mhm.
that makes sense, right? That makes sense.
Mm.
Um,
It does cost you more. It does cost you more per month because you're basically paying almost double the cost to speed it up, right?
okay,
So
okay.
you're right. You do want to confirm with a client's budget if it's
Mhm.
affordable, right?
Yeah,
So you
Right.
do want to see multiple, recommendations. You don't want to just pick that one. Everybody likes the idea of it being paid off, but can you
Mhm.
mhm,
afford it? It's two different things.
exactly. And
So
So,
it,
I'm just sharing the gem that it's possible to do so, but
yeah.
it's not required. You definitely can just have a whole life payment and just pay for the duration of your life, and that's less expensive as well.
Mm,
so
100%.
what would you say to, like, because um I know there's a whole heap of misconception around life insurance and the lack of trust.
Mhm.
So this is a two-part question. The first part is, what would you say, the myths are and why people shouldn't believe, like, get caught up on those. And in terms of like determining who to go to for life insurance, is there something that we should be looking out for?
Question.
No, just come to me.
So
Um,
okay, so that means I can so hold on, that means I can sell life insurance too. Well, I mean that's a good answer. Come to you.
Right?
Well, that's a good
What?
Case
answer.
closed. Case closed. Come to me. But yeah, I know there's a lot of misconceptions. I mean, I've heard it all. I've heard a bunch of things. Like I said, I've been in this industry for over 10 years now. So there's
Yeah.
Right.
people that I've had to somewhat convince because they've had these preconceived notions. There's a lot of hurdles with people I've had to try and get over to get it in their brain that no, you need this. You know what I mean? But I mean, I think that within the last couple of years, the Black community that I've come across there's been
Right.
a big
Mm,
shift with financial literacy. A lot of younger people, whether it be stocks, insurance, are coming to the point where they're like, you know what, we want to do better. We want to do
right.
better. Right?
That's
That's
I
good.
true.
see that a lot. I see that a lot more. I don't feel like it's as hard as it was in my initial stages. Things are kind of turning around. But in regards to how to know, who to trust and whatnot, Recommendations, of course, are always great. A lot of my clients do come from clients, right? They recommend. A lot of my clients also come through things like this, where they're able to see me talk about different types because I'm not biased. You know, some advisors are very pro-term and pro-permanent, and they'll give you all the stats of why this, and that's cool. You're allowed to have your own opinion. However, that's not me. It's dependent on what the client's actual needs are. And that's when doing an actual financial needs analysis, looking at what their needs are. Do you have kids, not have kids? Do you have debt? Do you care to have a legacy? Do you care not to have a legacy? Everyone's situation is different. There is no one size fits all. So I think just if you were a blank slate and say, Nicole, you know, what should I do? You know, in your best interest to, you can speak with more than one professional, but if you do speak with one professional, try to make sure you're speaking with someone that's not biased to one particular type. I always try to give, you know, quotes for each type: term coverage, permanent coverage. Even if, you know, they scream term coverage only, I'll still show them the benefits of what permanent can do for them and let them make the executive decision, right? So I think it's about having options and just not being pigeonholed. Because I think some people, from my experience, were pigeonholed into certain types. They didn't even know that permanent insurance existed because the advisor they work with was like term. So they didn't even know that permanent was an option, right? And that's and they wouldn't know any better because they didn't see anybody else. So how would they know? If they didn't do any research online or anything, how would they know? So that's the stories that come back to me when they say, I spoke with this one person and they didn't even tell me I could get that. Well, yeah.
And that's why we have Nicole in the house from CPN, giving us all the knowledge and the insight.
And I like how you actually said that you give different projections of like term, whole life, and universal, because it does matter like what someone's needs are and what they can afford, because we all know that the term life insurance is way cheaper
it is
than whole life. So, and I think it was funny you said, or not funny, but you mentioned if you max out on your RSPs and tax-free savings, it's ideal to do the whole life, if anything. So for the rich people,
another spot. It's another spot. So I'm saying if you're looking for somewhere else, because there's only certain investment vehicles that are tax sheltered, right? RESP, RRSP, TFSA, or whatnot, right? So if you're looking for another tax sheltered vehicle that you could use, you could use your universal life policy, but it's not something you have to do. I have many clients that have a universal life policy that are not overfunded, either because they can't afford it or they don't really want to do it right at this time. So it's not something you have to do, but at least the option is there.
Yeah. And just for people listening, when you say tax shelter, what do you mean?
Tax sheltered as in when your investment or when your money that goes into the account starts to grow in value, get interest, you're not taxed on the interest. So once again, going back to the TFSA, if you put money into your TFSA, you are not taxed on any growth, right? Even when you withdraw money from the TFSA, you are not taxed on any growth. The RRSP, down the line, you will be taxed. The RRSP, let me rephrase, it is a tax deferred vehicle because the tax is deferred to later on. So yes, you will be, but initially in the growing stages though, you know, the first 30, 20 plus years you're investing, you're not taxed on any of the growth.
Okay, that's good to know.
Yes. See, you're hitting so many gems. Jeez.
I know.
I remember hearing, I think, and this is the myths that Andre was asking about, that with cash value, it doesn't grow like in the first couple years. Is that true, or is it just, it depends on which one you get?
Exactly. So if you have a universal life policy and you're putting in extra money from year one, it's growing, right? It's typically growing. Depending on, once again, every company is different. So you'll want to talk with your advisor to verify and look at your policy. But the ones that I work with, you know, predominantly it's growing from year one. A whole life policy, though, for example, that has also guaranteed cash value, sometimes it doesn't start till year 6. I've seen some policies that start till year 11. So yes, there are some policies where the cash value is not growing right away, but in a whole life policy, you're not really overfunding. They're kind of taking a piece of your premium and putting it away. So if Camille's premium is $50 a month, all you have to pay is $50, but they kind of take a piece of that and kind of start storing it. And then over time, it accumulates. And then you're able now to borrow from that cash value, or if you ever cancel the policy, that's what you can expect to get back. So when you have a term policy and you cancel, think of it like car insurance. We pay our car insurance every month. Even if we don't get into an accident, we still got to pay, but we don't get any of our premiums back. That's what term is like. You pay for your term, you pay for the duration. If you pass away, it pays out. If you don't pass away, nothing gets paid. The whole life is similar in a sense where obviously for it to pay out, you have to pass away. But in year 12, if you decide, you know what, this isn't for me anymore, I don't want it, then you will get a check back from the guaranteed cash value component to whatever it had amounted to at that time. So in year 12, if there's $5K in there, you can expect to get a check for $5K back from the insurance company.
And on average, how many people like actually do that? Like in year 12, after like, I can't afford this anymore, and they just switch.
Not my clients. None of mine. So I don't got no percentage to give you there.
Which means you're doing a good job because you're actually giving people what they can afford. Like,
exactly.
Yeah, I'm very thorough. I'm very thorough. And I really can toot my own horn with this. And I think my clients, if you ask any of my clients, they'll always tell you that they've never been pushed into anything. They've seen options, because it's important for me as an advisor. Yes, advisors get paid based on what they do, and there's commissions and whatnot involved. That can't be denied. But it doesn't make sense for me to push you into something, and then within 2 months or 6 months, Nicole, can't do this again. Like, it doesn't help me and it doesn't help you. Like, I need you to be able to get something that you can afford, but also fits your life insurance need. Because I tell people this all the time. It doesn't matter whether you have term or permanent. What matters is what's going to be on that check. If you pass away tomorrow, what's going to be on that check? Is it enough to pay off the mortgage, to put your kids in school, to pay off your debt, all of that? If it's not enough, then you were underinsured. And if it makes more sense for you to have term because you'll have the right amount of coverage, then that's what I'm going to recommend. I'm not going to recommend a permanent policy for you, but yet your need is $500,000, but you can only afford $100K of permanent. That's not meeting your insurance need. I need your family, if something were to happen to you and I give them that check, they feel great knowing that, wow, my mom, my dad, my sister, my brother, they put this in place and we're good now. Not, Nicole, this is all they did. This is all they got. You know what I mean? So it's important to make sure that the life insurance need is actually met. All those other things, all those other bells and whistles come after, but you want to make sure that their actual need is met.
Jeez. I love Nicole's personality. You're just like, I'm the best, and I'm giving you the knowledge, and this is why I do what I do. Right? So I gotta pick you up.
And you should come to me.
And you should come to me. Like that.
Oh man. Well, let's see. Let's kind of.
Can I turn it on you guys for a second?
Oh,
so
snap.
No, it's nothing crazy. I'm just curious. Based on your guys' experience, what has your experience been like? And both of you guys are, working in the financial industry. What has your experience kind of been like in regards to insurance, either for yourself and your peers around you? Is it something that they're interested in, not interested in? What is that looking like now?
It's not even a conversation with my peers. To be honest, it's not, my peers. I don't think I've ever had any conversation with anyone in my circle about life insurance, other than Camille.
Yeah.
I think Camille and I are the only ones that talk about.
Right. I have been trying to push it with my friends, because obviously this year a lot of crazy stuff happened.
That's right.
So I'm trying to push it to my friends. I'm like, listen, my mom didn't have, but she had savings and stuff. So we were able to invest and all that good stuff, pay off debt. So it is important. And I hope like the people I know are considering it. Like I asked like my close friends, I'm like, do you have life insurance? No, I'm like, listen. I know it's that cliche, oh, you think I'm gonna die now? I'm like, no, it's just we have to protect ourselves. Like there's too many GoFundMe's and I'm tired. I like no disrespect for the friends and family that have had to get a GoFundMe, but it's exhausting when we know that depending on how like your budget, like you can afford life insurance. You just gotta tweak your budget so you be able to afford it, because you don't want your loved ones to be figuring out how to pay for your funeral and all that stuff. And funerals are not cheap. They are not cheap. Like even renting one is outrageous, right? So I'm trying my best with discussing about it, but it is tricky. Like I think I don't even have a percentage of people that have life insurance. I have a few, like anyone that has dependents and children, for sure. I'm like, listen, you shouldn't even be like, you have kids.
Yeah.
Why are you, right? Like, why are you even second guessing this? Like, it doesn't make sense. So that's why we're here, was doing the podcast to like push it out, because it's really important. And like with this month almost coming to an end, I'm hoping, individuals are able to learn a little bit about life insurance, because it's needed. We have we have insurance on our phone and all that stuff, cars. Why not on your life when it's
and that's one thing that I've heard you say in previous podcasts. The things that are sure in life are death and taxes, right? So we know that death, is unfortunately going to be a part of our lives. We don't know when, and I think going back to Andre, what he's saying about the misconceptions, like we all kind of have that Superman complex, not going to happen to me, not going to happen to me. But unfortunately, we don't have that crystal ball. We have no clue. And that's why this life insurance, getting that in place is something that ensures that, we all kind of have these goals of what we want for ourselves and our financial goals for our family. But if you are unable to make those financial dreams come true, life insurance can do that for you. You see, no doctor, one of the things that my dad would always say is, that he loves about what he does is with the stroke of a pen, I can make your family, millionaires. With the stroke of a pen, I can make sure that your wife will get $1 million or 1.5, something happens to you. No doctor, no lawyer, nobody can ensure that's going to happen. They can help save your lives in other ways, but financially, me as an advisor and the advice I'm giving you and the opportunity to purchase a contract like this will ensure that your family will get this in the event that you're gone. It's kind of a no-brainer. You know what I mean? And I think the misconception, once again, what Camille was saying, is that a lot of younger people, they just look at it as another bill, right? Another expense. And there's also a misconception of the affordability. Term is, like you said, is very inexpensive, especially if you're in your 20s, like even up to 30 years old. I mean, a simple policy, $25 a month, $30 a month, like, off topic, but just a month or two ago, I had a client that I dealt with in 2017, a couple. They did life insurance with me and they did critical illness with me. And, she was concerned and wanted to do critical illness. So just stick a pin. Critical illness coverage is a lump sum payout that gets paid out to you in the event you're diagnosed with a critical illness. So cancer, heart attack, stroke, whatnot, right? So I met with this couple and she had some concerns about critical illness because it ran in her family. So she wanted to get it. She's in her late 20s. She got this critical illness policy with me in 2017. Just 2 months ago, she called me and told me she's diagnosed with stage 4 breast cancer. Okay. This was officially my first claim for critical illness coverage, and it broke my heart. But at the same time, I was so happy that I was in her life at that time and was able to recommend this policy for her, because now while she's on their way to recovery, she's expecting a check for $50,000. Okay. So people might say, okay, Nicole, well, what she can do with that money? Well, remember, when you're sick, you're not working. When she's doing chemotherapy right now, losing all of her hair and having no strength, she's not working, but your bills still got to be paid. The mortgage, your car payment, everything is still coming out of your account. So what ends up happening is people end up liquidating any savings they have to supplement, their bills, because when you're on short-term DI or long-term disability, it's not paying for everything. It's a percentage of your income. So very quickly, when people are in, remission or they're going through it, they have to liquidate all that they've worked so hard to save. So critical illness will give you that lump sum benefit that you can pay bills. If you're a mom and you need childcare, if you, have people visiting you at the hospital. Because another thing too, people seem to think that all healthcare is covered by OHIP. There's many different types of medication that you have to come out of pocket for that it ain't being covered. And that also liquidates your savings. So this is once again where critical illness comes into play and having that lump sum deposit. So she can rest assured that she can focus on getting better and not have to worry and have that financial stress on her head. So I'm so happy that I was around to put that in place for her so that, there's some financial protection in her life.
Absolutely. Because I also had a family friend that had a stroke last year or 2 years ago. They had it twice. And they were able to have, they had critical illness. So insurance. So they got a lump sum, and she's like, I don't know what I would have done if I didn't have this, because the bills still have to be paid. So I'm glad you actually dabbled into that, because as much as there's so many expenses that we have, but it's going to help us in the long run, because especially if you have something in your family genes or whatnot, that it's bound to happen. It's good to protect yourself. And how much, on average, how much more is it with critical illness on average? Just so people get an idea.
Once again, it depends obviously at the time of application, how old you are, what type you're getting, the amount. But this same client, I don't think she was paying more than maybe $22 a month. And she's had it since 2017. So a few years, and now she's getting a $50,000 payout. Definitely, less than what she was paying towards that policy. But critical illness is also, less, not that expensive, depending on how it's structured. So if you're interested in it, don't right away think it's another $100 bill. Not necessarily. Speak with an advisor to look at different options, different coverage amounts, different coverage length amounts, because you can be covered for 10 years, 20 years, till age 75. So all of those play a role, right? So obviously the smaller the term you get, the less expensive it is. But if you want to make sure at least for the next 20 years you're good, get a 20-year critical illness policy for 50K, 100K, 2 times your salary, to ensure that if something were to happen, you have that backup there. And just to add one more point too, if your budget allows for it, they have something called return of premium, which means that if you don't get sick and don't make a claim, you can actually get all of your premiums back at the end of the policy.
Oh, really? Nice. That's good to know.
So
yeah, that's really good to know.
Win-win, you know what I mean?
It is. And I was just thinking, we're not getting any younger, as you said before. So it's good for us, I'm gonna assume we're all in our 30s. And just make sure, especially if you know family history and stuff, kind of protect yourself. And I also wanted to ask the question, because I think you mentioned this on IG, because I do follow you on IG. COVID. Is COVID affecting people getting life insurance, or getting the vaccine and all that stuff, or had COVID and stuff? I think I heard an issue about that.
Yeah, so there was a rumor that was circulating about a couple months ago that's saying that, if you got the vaccine or whatnot, you wouldn't be protected. And that's simply not true. The Canadian Life and Health Organization did release a statement saying that that is not true at all. Insurance policies, of course, will be paying out. They want people to be vaccinated. So hands down, that's not true. Now, if you have COVID, does it affect your life insurance application? Yes, I believe so. To be honest, I don't have the full 100% answer yet because I've yet to have a client, unless they lied to me, but I've yet to have a client that's had COVID that has applied. Actually, no, that's not true. Actually, that's not true. I have one right now, kids actually, where they had COVID, months ago, but they're fine now. Yes. I think most insurance companies, they're fine if you had it in the past. They can see that you're cleared and whatnot. But obviously, if you currently have COVID right now, yes, that could definitely pose an issue of you trying to apply for insurance in the time of you having COVID.
Which makes sense, right?
Yeah.
That kind of makes sense because there are cases of people dying. So it's like you're sure. It's just like you said, you're reacting. Now that I have COVID and I think something might happen. Right.
Yeah. You can't wait until something happens. I mean, this pandemic definitely changed my industry. I would say this is probably one of my busiest years, and rightfully so. When you see people that are passing away left, right, and center all around you from something that you can't even help to get, you can go to the grocery store and come home with COVID, not knowing that you touched something. It put a lot of fear in people. And about 31%, based on a stat that I saw, 31% said they're more likely to buy life insurance now because of the pandemic. So you can see why us advisors have been super busy, this past year, because it's put a lot into perspective that, crap, like I could pass away at any point in time unknowingly just by coming in contact with an asymptomatic person or whatnot. So yeah, but back to the original point, it is a risk for the insurance company to take you on knowing that you have full-blown COVID right now. So you definitely want to wait till that passed, you get cleared, but then definitely I would definitely not hesitate to apply going forward.
Yeah. Okay. I'm glad we were able to clear that rumor because I remember listening to it, I was like, really? That's an issue? That doesn't make sense. But what was I gonna ask? So because you have so much knowledge, Nicole, you have a lot of knowledge.
A lot, I'm sorry.
No. It's great. It's great, right? I guess what are the 3 things you wish you knew about personal finance, like back in the day, that you've kind of learned, or at this moment in time? Either way, what are the 3 things that you wish?
So I mean, not to sound like I'm bragging or anything, but I didn't really, and I don't know, because I can't even say that my dad really sat me down and drilled things into me either. Maybe it's just intuition, but I'm gonna say that I didn't really make, a lot of bad financial mistakes prior that I can say, this happened. Maybe because people around me were doing certain things, I just knew like not to do it. So I've been pretty good. I bought my first property at 23. I was the first out of my friends. I bought a condo at 23.
Wow.
That was, thank you. And to be honest, it wasn't even like a goal, like I have to buy a property. I was just doing a lot of overtime at that point, had a lot of money saved, went to go visit a friend of mine in a condo that the condo was still selling units. And I just happened to go in and see like, what's the price if I want to live here, and saw the down payment structure. And I'm like, well, I have that. And it just became like, I have that money. Let me just put this money down. And next thing you know, at 23, I bought a condo. So that's one of the things that led me to where I am today, because if I didn't purchase that condo, I wouldn't be in my single detached house that I have now. Everything was kind of a stepping stone, right?
Sound the alarm.
Yes.
Sound the alarm.
Honestly,
sound the alarm from the single
is
detached
like
home.
Nicole's like a boss lady,
right? You have to sound the alarm from that because we need more of that in the community. So
we do. But what I will say though that I didn't know much about that I know now is borrowing to invest, aka leveraging. I wasn't too.
Nicole, now your best friend.
You like that, Andre?
Oh yeah.
I want to let people know. I want to let people know that a lot of people think they have to save to get to a certain point. But if your ducks are all in a row, your credit is good, you can actually borrow from financial institutions to get what you want, right? That's one of the things that I do in my business too, is leveraging. Some of my clients, they want 25K, it's gonna take them forever to get it. You can actually borrow 25K from a bank, providing you're good financially standing, and put that money into the market and get some excellent interest, right? So borrowing to invest, didn't know much about that before, so that's excellent. And number 2, the stock game. Stock has become amazing the last 2 years. It was an amazing year for tech. I'm sure you guys all know that last year.
Mhm.
But earlier on, I wasn't really into stocks. I didn't know, I knew what they were, but it wasn't, this is prior to me being in the business. It wasn't like a thing. Like I didn't know much about it. So if I could change one thing, I would have wanted to know more. But YouTube was probably around back then, but not that much. Like the way that things are so accessible now to the youth, they have so much more opportunity to know things for free, like
Absolutely.
podcasts like this, you know, other channels right at their fingertips. So I would encourage you, if you're watching this now, you want to invest, not sure how, not where to go, continue to watch, of course, this podcast right here for gems to be dropped. But on top of that, look into other financial resources online. Everything is there for you for free. For free.
The
You know what I
amount
mean?
of things, the
So
amount of
much
things that I
information.
learned.
So much information is there.
It's so true. Like just this week alone, I learned like a couple of things more about like stock market. And Andre knows that I'm addicted to the stock market. Like it's ridiculous. Like there's no reason why our community can't make money.
Exactly.
Nope. And I think it goes back to like when people think of investing, they just think they have to have a lot of money. They think to start, they have to have 5 grand, 10 grand, 20 grand. It just seems like this like out of touch thing that, you know, we can't be a part of when you totally can. I mean, stocks obviously range in different prices and it's up to you to purchase what stock you want. But for as little as $50 a month, you can dollar cost average into any Questrade Wealth Simple account and purchase little by little. You don't have to buy a whole bunch. You can just buy little by little with your paycheck and put those down and watch them grow. So I would encourage you just to research.
I'm glad you talk about leveraging because I mean, Camille knows this, that I talk about leverage almost every single day. And I am actually utilizing a strategy right now. So I've created my own strategy. I've said it publicly a few times, but I haven't said much because I want to develop it further. But a key component of my strategy for the next 5 years is leveraging, right? To use that to my advantage. And, you know, I think it's something our community need to hear more about because what happens is that we are more used to debt in the sense of being a consumer. So when we take on consumer type debt, we get ourselves in trouble. And so that makes us afraid of debt, right? But if you're using debt as a way to build wealth, it's a whole different conversation we're having here about that. And that's the whole concept of using other people's money, right? AKA the financial institutions and the big lenders, right? So maybe we can bring on Nicole on another segment to talk about
I know.
right?
Nicole, you have
leveraging is huge, you know what I mean? And I think, you know, like you said, it just goes back to reframing your mind to, because to be honest, I still struggle with it too. Like I don't like, you know, I don't like looking at my report and knowing I owe this or knowing I owe that. I want it to be clean. I want to have zero debt. And some people are like that too, or the idea of owing or borrowing, they can't get past that hurdle. But if you want to build real wealth though, I mean, and you don't have the capacity to finance do it yourself, it's attainable.
So, but I think my wife is in that category as well, because I showed her a situation the other day and I said, we can use full leverage to finance this property purchase. And she's like, oh, really? You want to go that route? Why not just come up with the down payment ourselves? And I'm like, why come up with the down payment if we can take the mortgage and take a loan to finance the closing costs and then pay off the closing costs in the year once we generate income from Airbnb? Anyways, it's a conversation that's so new. It's new for me, it's new for her, it's new for the community. But you know, there are so many ways that you can literally become even a property owner without any money from your pocket, right? That's through leveraging. I won't share the secret sauce as yet, but
in the future, don't worry.
In the future.
Oh, man. And also, Nicole, you have a lot of gems. Like, you know, about the leveraging, life insurance, critical illness insurance. But I want to bring it back to the family. Because, like, I see that this is a great legacy that can be here for millions and million years from now. So, like, how do you wish for the legacy of your family business to continue? Like, are you I know that I don't want to say it because I don't think you said it yet. But how do you see CPN Financial Services in the future, basically?
Well, no, I'm exactly going to touch on what I told you, because that is my complete vision. So, like I said, CPN stands for, you'll call them Peter and Nicole. My dad started this business probably hoping that we would join, but we all organically did. And my hope for the future would just be to continue to, of course, empower and educate the community, getting everybody insured, because that's a huge part of our business. My brother, Peter, which I haven't spoke to you guys about yet, he's really big on the real estate side. So he's an advisor as well, like myself, but what he dabbles into more is similar to what you're saying. He's huge in the Airbnb space. He has properties here in Florida, all over, where he's generating wealth just by purchasing these properties different ways, leveraging a lot, and having these tenants and hosts pay for the mortgage, right? So we want to teach our community more about that as well. But my vision, because my name is Nicole, I did share as well with Camille that one of my main things is my kids. My son is 8 years old. He sees what I do. Just this week, I found a little scratch pad where last year in school, they asked, what do you want to do? And he said, I want to be the N in CPN Financial like my mom,
I love that.
That's really cool to see. And then the backup plan is, if he changes mind, then this baby will have an N name as well. And she could be the replacement.
So the succession already started. There you go.
Yeah.
Succession.
Done started already. So that is the plan. I'd love for them to be in the business. And, just like my dad, there's no really pressure there. Whatever my kids want to do, I'm all for it. But at least the same way that my dad set that up for us, I would love for my brother's kids and my kids to have the option to join this, where they can work for themselves, not have to work for the man, have very meaningful, impactful work that changes the lives of others, while having the flexibility, to be self-employed and do what they want to do. So
right.
It's a win-win.
It is a win-win. Absolutely.
That's nice. And question, Colin, Peter, are their children's names with C and P as well? Was that their game plans as well?
No,
no,
it's not.
I'm the only one.
Yeah, maybe their mom is probably, because I'm the female, so I kind of have a little pull with the names. So maybe their wives, wanted to go in a different direction. So maybe they didn't have as much say. I'm not sure. But no. I do have a nephew that starts with an N. I do have one. And actually, no, that's not true. I have twin nephews that start with an N and a C, Christian and Nathan. So they very well could be, succession, planners as well, and get into it as well. So yeah, the foundation's been laid.
Great story, a great family business, and it's a brilliant and beautiful model for the community. We really need to see more of this. Thanks for bringing on Nicole, Camille. Great addition to the podcast. And people, if you want your insurance, who is it called? Nicole. I feel like that's supposed to become a buzz sound in your head at the time you finish listening to this podcast.
Right? We'll definitely put the description. Nicole, where can people find you actually? And then I'll put in the description and all that good stuff.
Yes, I'd appreciate that for sure. So definitely you can reach out to me online. You can find me on Instagram at Advisor on the Go. So you can find me on Advisor on the Go. You can definitely check out our website at cpnfinancial.com as well. And also, just going back to the wealth and the seed planting, we also have a non-for-profit called Seeds for Success, where we teach youth financial literacy. So we have programs that run. Right now, we've kind of been on a standstill because of COVID, unfortunately. So we haven't been able to have our in-person workshops. But we held them in Brampton for numerous years, and they were sold out every time. And you can follow us at Seeds for Success, I believe, _ on IG, to keep in contact with us to know when our next workshops are going to be coming up, because we're going to shift to virtual, obviously, now, because things are still, through the pandemic. So if you want to know more about, that, do check us out there, because it's been great for the kids and they love it.
All right.
Yeah. And I've been doing things like that too for the kids, like stock market game challenge. So it's for us to look towards the kids. And Andre, you do that too with Flip and Floss. The kids is the future, right? So it's very important to, I didn't want to say train, but condition their mind or reframe their mind to have a money mindset or have a growth mindset, because they are the future, and we'll still be able to help our uncles, aunts, moms, dads, grandpa, grandma. But we do have to focus on the kids as well, because when they learn, everyone learns too at the same time.
Exactly.
Right?
Exactly.
So,
Exactly.
man, Nicole, it was an honor for you to be here. I'm gonna put all your information in the description. And ladies and gentlemen, this is Nicole. She's a boss lady, right? And just like, subscribe. It is Life Insurance Awareness Month. We want like 100% of our community to be insured, because we can guarantee one thing in life, and that's death and taxes, right? So, do you have anything to say, Nicole, before we close out?
No, I think we covered it all. I mean, I want to thank you, Camille and Andre, for having me on. This was amazing. This is a great, organic chat that I feel that people will definitely find value in for sure. So definitely, I hope to be a part of this again, in the new year, discuss some other topics. But if, there's one thing that you guys can take from watching this today, is just to take some action. You know what I mean? Knowledge is power, but if you don't put it into action, realistically, in one ear, out the other. So get some information, reach out to me if you want to know more about different types of insurance for quotes, and do it soon, because this baby is going to come out anytime.
That is true. That is true. You have to get it before October, y'all.
Yeah.
All right. So thank you, Nicole, for being here. It was a pleasure. I'm glad. I was like, I have to get her on. Like, it's like a must. I told Andre, I was like, yo, we have to do this. Like, it's a must. It's a must. So thank you so much. And now you're part of the family, right?
Blessings.
Yes, I appreciate it. Love it.
So let's go on with the outro.
Anyway, music. Flip, flaps, money, literacy box. Flip, flaps, money, literacy box. Flip, flaps, money, literacy box. Flip. Anyway, you jump. Flip and floss, money, literacy box. Flip, flaps, money, literacy box.